Hello, everyone. Heidi ho to you, and happy new trading week, or happy new week, in fact, to you. It is the 13th of January. Goodness me, 2 weeks in already, and here we go. The year is off and running. Well, at least I hope it is. A little bit of a sticky market last week, one would have thought. A little bit tricky. No surprise there, given what was going on all over the place, in particular with the Iran and US conflict. Let's hope we've got a little bit of a settled down market to contend with this week rather than all of that. Oh, hang on a sec. I've got a feedback.
Good morning, mate.
Happening here. How are you, mate? Hang on a sec.
Not too bad.
I've got an issue. Oh, you can talk. That's okay.
Cool.
I've got myself in the background, so I've got to get rid of. Oh dear.
You struggling there, are you?
I am.
Okay. Do you want me to set the screen? Will that help you?
I think I'm okay.
Okay.
I think I'm okay. How you going? No,
I'm not
okay.
too bad, mate.
No,
yeah,
you
not
take
too
the
bad.
screen if you don't mind. I've got noises everywhere in my ears.
Sure. Okay, let's have a look what we're looking at today. Oh, you might need to give me the screen, actually. Cool, thanks, mate. Okay, so let's have a quick look at what we're looking at today. I think it's maybe another tricky day for trading. I'm not sure whether I really want to be involved. I'm still looking for downside. This isn't a bad area. Let's just check where that's come from. I've drawn these lines the other day. So that's come down from there, gone through there. Could be a head, could be a shoulder. Another move to the downside on Friday, which I actually managed to sell into, but I left the trade open and only took a little bit of profit on it. In the end, it popped up this morning, but we do have a gap there that needs filling. But I've got a bit of an issue, if we sort of have a little think about what could be driving the FTSE specifically today, then we don't have to look very far to kind of see what's going on with the pound to show really what could be boosting this market up, which doesn't suggest to me that that we should be looking for any downside in the FTSE at this stage. I am interested in downside, but until this kind of like puts its brakes on, then I'm not too interested. And the pound is probably getting fairly close to a buy zone. But over the weekend, we did have calls for a potential rate cut from the Bank of England, from some of the members of the Bank of England. I'm incredibly dubious about this market's movement. I'm incredibly dubious about the upside in stocks. But when you have certain factors at play that don't really allow timing, then there's not really too much point in getting involved. I wouldn't be too interested in upside pound because of that. The only caveat to that is that the announcement hasn't been made as yet that we are going to be lowering interest rates. It's just that there are hints that those tools would be okay to be used if we do see some further weakness. And I think we probably do see some further weakness. Let's go back to the FTSE and see what happened last week. This engulfing bar is suggesting downside. Gap up this morning and looks like an inside bar, which can be a fairly bearish indication of what could go on. Market's just opened up, and what we're seeing right now is just a little bit of to-ing and fro-ing. It's going to have to break down probably these levels to give us any significant downside. But as I say, not too interested really right now because of the story of the day. I do like this area for some downside, and I would quite happily trade it. You can see that there's a double top here, and I'd quite happily trade it if there was some reason for some weakness. But because there's not, I'm just wondering whether if we do creep back, we just creep back just a shade and then start popping up again. And I think the popping up is my I think at this stage is probably the path of least resistance. So let's just double check what else could change the view on that. This is gold. And gold is probably sitting near a buy zone as well. Also a pop-up on Friday that has been retraced. It's sitting at a buy zone, so there is a buying opportunity, certainly on the short term with gold. I'm not sure whether that goes too much further. But again, what's going to be the driver for gold to the upside? And I've got to say, I don't really have one. So I'm not interested in golds to the downside either at this stage. Sorry, to the upside either at this stage. But at some point I will be. So if I look on this on good morning everyone, by the way. Sorry,
Good morning, Ash.
Good morning, mate. Sorry, I've just gone straight in, haven't I?
You know, I'm back.
You're back. Brilliant, mate. Brilliant. Okay. Yeah, just kind of. I don't think there's going to be too many opportunities for me today, mate. I looked at the market this morning. I checked the news. I'm really interested in downside, but I just haven't got any justification. We had a jobs report out on Friday which suggested that there could be some weakness in the market, and the market did weaken, but subsequently it's popped all the way back forward again. Now the only thing could be that they're still digesting that, and when the digestion comes back in, then maybe the market does come down, but the pound is the big problem, so it's the elephant in the room when it comes down.
Yeah, you're telling me.
Yeah, it's a difficult one, isn't it? Because, as I say, it is on a buy zone, as gold is on a buy zone. And, at best, what I'd like to see today is a hold. But I wouldn't be trading it. I just think it's just too dangerous with the current climate. The market is still running extremely confident and very, very hot. So I'm quite happy just to sit this one out and see if there's any more upside available, because obviously, if I'm looking for downside, the better the price I get, the better the opportunity to make that bit more money. So I'm just sitting on the sidelines right now, mate. I'm looking at the S&P. And S&P, as well, we look at this on an hourly chart, but this is definitely starting to look like a head and shoulders pattern. There's the head. Looks like we could be forming a right shoulder. So interested to see what happens in the US session. Again, difficult one to kind of really kind of get on board with that as yet. So I don't think that there's anything that is palpable that we could really grab onto. We've got Chinese and American trade negotiations potentially being completed this week, and that is maybe enough to keep this market buoyant. But let's see what the market is suggesting. I'm just going to flip back to the FTSE just for a second here.
Mm-hmm.
I'm only using these other markets just to kind of ascertain whether there's strength or weakness in the market. In fact, before I do that, let's just quickly get to the yen. Now, for me, this is the trade of the week. I really like some yen weakness and some dollar weakness against the yen. COT reports suggest that there's lots of buying and confidence still with the dollar. So I'm not sure where the opportunity lies. I'm not sure whether what the driver is. But this is on a brilliant sell zone, in a brilliant sell zone right up here. And if it can't get through this level, then for me, that the most likely route is to the downside, and to the downside quite a way. So I like dollar yen for some weakness. I like the markets generally for some weakness, but I've got no justification with gold dipping down, the pound dipping down, the S&P holding firm right now, and dollar yen really holding firm. I don't really have a whole lot to offer, if I'm honest, mate. The other thing is, that would suggest we should be looking for upside, which is fine, but it's so toppy pattern. The pattern is so toppy up here. When we kind of look, then we do have these kind of areas of potential resistance. These are potential kind of selling areas, and I'm not too keen to play the upside because I just don't see that there's that much to be made out of it. Maybe 40 pips to the upside, but I just see it as being a little bit too dangerous. I think that not a lot could tip this market over, and we saw that with the jobs report on Friday that it did come down a little bit. But I like the weekly bar for suggesting downside. I like the daily bar, as it's opened up, for suggesting downside. But maybe we need to see this close up before we actually get into it. And finally, if we kind of look for just at the news and data for the day, again, doesn't suggest a lot. GDP out of the UK That's going to be a fascinating number, because if that does come in a little bit short, then I wouldn't be surprised to see the pound extend its moves to the downside, and possibly that's when the FTSE pops up. Obviously, the counter argument to that is if GDP comes in fairly solid or strong and manufacturing production comes in the same, then there's every chance we see the pound start to reverse. So if there is a time area that I think we could maybe start looking at the charts again, it would be after 9:30. Nothing else here which gives me too much in the way of potential directional bias or catalyst for the rest of the day after that 9:30 period. And finally, looking in for tomorrow, I'm interested in these numbers here from China. Trade balance, US denominated trade balance as well. Not so much the new loans, but I think this could be a very, very interesting number. Now that leaves us to the 14th. We got CPI data also from the US. Again, that's going to be very interesting given the jobs data that we had. Inflation starts to kind of creep up. Then what do the Fed do? You know, they're going to be in a lot of trouble if they've got inflation popping up, jobs average earnings popping down. That is going to put them under a lot of pressure, because traditionally, just for the listeners out there, the inflation popping up, you know, one of the tools that can be used is a hike in interest rates. So if they can't do that, they won't be able to do that. They won't be able to raise interest rates. So this could be a fascinating number, I think, tomorrow, mate. And maybe that's when we see things change and get a little bit more interesting in the market, depending on what that number is. Going into Wednesday.
Sorry, mate. Yep, you go.
So going into Wednesday, the MPC member Saunders speaking also becomes quite interesting because of what we had over the weekend. You know, if we start to get these members continuing to suggest rate cuts, that could further weaken the pound. CPI data is also going to be an interesting barometer. That weakening somewhat, then that could potentially maybe show the hand of the Bank of England. We also go into FOMC, Harker speaking and Kaplan speaking. These are going to be I think, a little bit more integral to the market than an orange folder. You know, if there's something between orange and red, then I think it probably sits somewhere between that at this current climate. We also have on Wednesday the signing of the trade deal between the United States and China. So we got to watch out for that, because we know. Yeah, well, you know, Donald Trump is extremely schizophrenic. We know that about him. We know that he can change his opinion and turn on a dime. So there's always a possibility that can happen. So let's watch out for that, because if he gets cold feet, this market will have enough reason to come down, and at that point, I think it comes down hard. So let's see. You know, that there's no suggestion that that's going to happen. But as I say, we are dealing with somebody who has got form when it comes to about turns.
It wouldn't be the first meeting he's walked out of without signing anything.
Absolutely right. Yeah, absolutely right. And you know, the deal has been written in English, and I think that there was some potential questions about the translation. So, you know, there could be some sticking points. It's unlikely, as I say, but let's watch out, because we can't discount anything with this current president. Obviously, big numbers from the United States on Thursday with core retail sales, and the ECB President Lagarde speaking. So that really could be the day that things start to move in a direction. Maybe we really get, we finally get a breakout to the upside, or that's the possible turnaround. I am looking for a turnaround, because the market's been running so hot, but it can continue to run hot, and then there's every chance that the turnaround doesn't come just yet. But this particular day could be quite interesting. We also have earnings reports from some of the big banks in the United States as well, and with a call of, well, you know, the jobs data specifically on Friday coming in as it did, giving us maybe just a little bit of insight into what's going on with the American market. We are just looking for hints and tips that the American market is starting to slow down. You know, we've got global growth slowing down, but the American market has held up pretty well. So if there are hints that that's happening, then that could also be a driver if the Fed doesn't come out with the correct rhetoric. And then finally, massive number from China, GDP quarter over year. So we do have a very, very significant hint about the state and the health of the Chinese economy. So I would say 2 a.m. UK time is not a time that I would normally be awake, but I may well stay up for that one if I can. And retail sales, obviously, out of the United Kingdom, will probably just give us a full stop of the week rather than being an actual driver. I think by that time we'll know what the direction of the pound is. But that is our week ahead, mate.
Right, mate. Look, I'm looking forward to it, I've got to say. I'm going to be a busy beaver. But before I go into that, let's take a look, shall we, at... why can't I see my share screen? I'm not having a technical happy day here today for whatever reason.
Oh, you're having a bit of trouble. Do I need to stop sharing?
You will.
There you go.
Okie dokie. And that looks a whole lot better. All right, first up, let's go with the pound breakout trade. And the entry levels today, don't forget it's Monday, and Monday is a shocker for this particular system. So half a lot only for me, or 0.5% rather, only for me on this particular trade. And the entry level short will be, if I can see it, I can't remember what it is now. It is 1.2989. That's the entry level short, with a stop loss at 1.30. Let me get that right for you. I don't want to give you the wrong number. It'll be 10 above there, so it'll be 1.3037. And the reverse will apply for the long and the stop for the long. So the long entry is 1.3037 and the long stop loss is 1.2989. Okay, that's got that out of the road. Now, I didn't trade on Friday, which is the norm for me, but I am recording what happens every day. So we would have been short on this bar here, and we wouldn't have hit our stop loss here, I don't believe. I think I've been through this. 138.7 would have been the stop loss. Sorry, 139.7 would have been the stop loss, and 139.6.4 close, but no cigar. So we would have stayed in that, and trailing, let me get this candle right. So in there, trailing on a 15-minute chart, we would have been taken in here, and we would have trailed to, oh, it's Monday. What am I doing in Monday? What was the entry? I'm using today's entry. Duh. Let me get that right. So the entry would have been here, 5 pips below there at 130.55. So there-ish. Is that right? The low is 130.54.7, so that's 49. Pretty close to there. So you would have been triggered on that candle. Our stop loss wouldn't have been hit, and you're trailing 2 bars. So 2 bars here, that would have moved to there, which is pretty much the same place. Then you would have moved it down to here, and then you would have moved it down to where? So you'd still be in this trade, for goodness sake. My God.
Nice.
I thought when I went through this before I could see a loser, but I can't. Oh, hang on. That's why. I'm on an hourly chart trailing. You wouldn't still be in the trade. Don't get too excited. Okay, so in here, stops not hit here, stops not hit here. trailing 2 bars. So entered here, trailing 2 seller bars there, stop loss to there, and that would have been as good as you got because you would have been taken out. So you would have been taken out at 1.3070, and that made you look like this, 1.307. That's right, that's how it was. So you would have lost 0.44% on that in the traditional way to trade it, or in the more aggressive way to trade it, you would have lost 0.55. So that takes our accumulative totals to 12.04% positive on the traditional way to trade it, and 14.19 on the more aggressive way to trade it. So still going strong, and despite the fact that we had 3 losers last week, 2 week losers the week before and 5 losers the week before that. Well, that wasn't because it crossed over. But we had 3 losers, and this is the whole point of the exercise, guys. If we had 3 losers, it means we only had 2 winners, right? But the key factor here is we still had a positive week. And if you're only getting 40% winners, which is what we did, and still have a positive week, that's pretty cool.
Yeah, very cool.
Because if we can get a 60% win-loss ratio, you can see how that can climb very, very quickly. And that's, of course, what this is all about. So 40% winners last week. What did we actually gain on there's Monday there. So we're at 11.87. So we gain 0.13 plus 0.00, so 0.17 only, but it's positive. And on this way to do it, we would have gained 0.64. So nearly 0.5%. It's not the worst result, Ash, is it, for 3 losers?
Oh, that's great, man. And the thing is, if you know, it's one of those, isn't it? If you're gaining 0.5% a week, then we're talking about 2% a month, which at the end of the year, you know, it's got to be near 25%. I guess.
Okay, yeah.
Oh, it's great. I mean, you know, where are you going to get 25%? And that's just one that's just one method, and one particular trading, you know, one particular way of trading.
And we haven't refined it by any stretch. You know.
No.
It's very basic.
No, haven't had Peter do a little test on it and kind of refine it down. So I think there's a lot of scope for this particular trade. I really like it, and it's one of those that you know, you were trading this quite a number of years ago when you, if I'm right.
Yeah, it was absolutely more than 10 years ago. I was trading this.
So inevitably, it's gonna need a little bit of tweaking, isn't it? It's just that, you know, and it is such in its early stages of you getting back into it. I'm sure you're going to discover ways to supercharge it a little bit more. But
yeah,
I'm saying, man, if
you're
getting 0.5% a week, then I don't think anybody could really grumble about that. Even if it was 0.25% each week, I think that's still a really positive trading result, because, you know, that's kind of like hitting 12% a year, and you're just not going to get that yield on just about anything. And just as one particular strategy and one way to approach the market as an addition rather than as a front runner, then I think that's pretty solid.
Yep. If you've got a couple of strategies running at that, you're doing okay, and you don't really have to do a lot of work for it. That's what I like about it. You know, this is like 5 minutes of your day, really.
Yeah, absolutely. Just got to follow the rules, haven't you? And it's really good. It's a really good one actually for that. And I guess you know, something when we think about when I think about the market, and the question always comes up, you know, how do you train for the market? How do you practice? Because, you know, obviously you can get a demo account. That's kind of one way to do it. But there are so many different aspects of trading that need to be practiced that you almost have to run different exercises for yourself. And you know, this would be a really good exercise for somebody who isn't so good at following rules, because I think the rules are pretty structured, aren't they? They're fairly binary.
Yeah, that's right. You might like to monitor what happens if you trail on a 5-minute chart. You might want to monitor what happens if you trail on an hour chart. It will produce different results without question.
Yeah.
And all you need to do is work out which one is better over time. Don't think 1 week's going to make a difference, because it won't. What you need to do is monitor this over time, which is what I've been telling everybody who's been in the show to do, and even put forward your ideas into in the chat box, because there are many ways to skin a cat. You know, and it's not just trailing on a 15-minute chart that's going to produce the best results. Absolutely not. And that's what Ash is talking about. You know, the more this goes on, the more we tweak it. The obviously the better we hope it to be. So far so good. Looking at this, and this is one of the things that I have to get out of my head. There's no way known to mankind that I would take this trade short. No way known to mankind. But it looks like now we've been triggered into that. So let's hope it just keeps tanking.
Well, do you know, it's interesting, really, isn't it? Because we were talking about the pound last week when you were in that Kiwi pound trade, and I don't know if you're still in there.
Don't talk about it. I got out of it.
Oh, you got out. Okay.
Yeah, and look at it.
Yeah, I mean, I kind of liked the pound for some downside, and it is at a level now of support, but I think that anything that kind of pops up with the pound, and that's the only thing about the that pound that cable trade that you're in there. It's not so much whether it pops up, it's how far it pops up, because I think this one probably needs to kind of feed around the bottom for a little while, and I think it probably will. I don't think the pound has got anything specific that is going to drive it forward. As I say, we got this GDP data later, so there's no reason for it to just break down, certainly in the next hour and a bit. So we may well just kind of like meander around for an hour, but after that we're definitely going to see some movement, and if that data is poor, then I think we could see some significant movement, just because of the market sentiment right now is for the Bank of England to intervene. And they only have to give a hint of that, and then there'd be bad data almost directly after that, to see the market react, and probably react fairly emotively initially. So there's still nothing on the table from the Bank of England, but because of what they've said, then I suggest that we probably will see some further weakness with the pound, and subsequently that actually could drive the FTSE up. So I'll be on red alert at 9:30 to see if there's a little, I suppose, short term, just a little day trade on the FTSE to the upside. But other than that, mate, I've got nothing. I'm really waiting on this week to unfold and develop. I think if we're going for some swings in the market rather than some short term blasts, then today is just not the day.
Yeah, look, as I said, I've got loads of things to have a look at, and I'll do that now. But actually, we did flag this trade in this show, I think, as well, didn't we? I think so. So there may be some people in this that are still in it, and I hope that's the case, because you wouldn't have received my my management, which was, look, it's very easy to look back and say you did a horrible thing, and I'm gritting my teeth right now because this is now a couple hundred pips to the good, pretty much. But my philosophy last week was very much the same, and I was preaching it all week. Take profit early and get yourself safe in the market. Keep your stops wide. What I didn't do was keep my stops wide. I moved my stops to entry after I took my first profit, which was just here, and that of course is now notably the wrong thing to have done. Clearly, because my stop was up, my stop was here, which was an obvious place to have my stop. So
this is where it's interesting, isn't it? I think when it comes down to stop management, I don't think that there's one way that you can trail a stop. But I think that the market sentiment and environment has to dictate how you manage your stop. Sometimes you do need to give something a little bit more room. If you're fairly comfortable that it's going in your direction, then it does need a little bit more room. But if you're a little bit sketchy about what can happen, then those stops do need tightening up. And I think it's interesting with stop management that there's with just about everything with the market, there's no hard and fast rule, and the only way we can really get around it is by noting all the the different potential things that may drive our decision. And mate, it's, if you weren't too sure about it popping back up again, then actually moving the stop's the right thing.
Look, winning trade, can't complain, but
No.
you know, I've left something on the table, and potentially I've left a fair bit on the table. But I will continue to monitor this, and if it comes back to this level, then maybe we've got another chance to get back in. We'll see.
Yeah,
Not,
I wouldn't
not.
mind seeing it pop up into the news. You know, that's something that often it creates opportunity, doesn't it? You know,
Yep.
when sort of like people are buying, you know, we know there's an announcement coming out, um, then it can actually create opportunities. Even though I'm seeing this pound continue to weaken here.
And hi, Shandru. And yes, we're just speaking about that, mate. The hint at the rate cut could well be very, very interesting for cable and
Yeah.
pound pairs.
Yeah, let's see if we get a bounce into the release of the data. But pound popping continues to pop to the downside. FTSE is popping to the upside. S&P is also dragging its heels to the upside as well. Gold is continuing to weaken a little bit. The Dow Jones Industrials just creeping forward. I'm seeing the yen. The dollar yen just about hold that zone, but if anything, that's also popping to the upside. So this market needs to settle down a little bit and just hold its position. But right now, there's still a fair bit of confidence out there with the risk on environment. And I'm guessing you're going to get to the Aussie at some point, mate.
Yeah, just about to go there, mate. As a matter of fact.
Yeah.
And
Okay.
look, as I said, there's an absolute truckload of things going on for me this week, and it's because of where markets actually sit. Sorry, there's our 9 o'clock bar there. So we'll start with the Aussie. Oh, sorry, before we do that, LT, you asked the question. I better cover that for you and go back here. If you want to take a screenshot of that chart, maybe I need to share it. It's probably a good idea, right? You share.
Do you know what, that one that's 1, 2, 3 back's a fascinating bar, isn't it? Because look at how, in fact, you got two there that I think are really interesting. The one that is back is 3 back.
Oh, sorry,
Mickey,
mate.
yeah.
You're just about to
That's
lose
okay.
that.
That's okay.
I'll come back to it in a tick.
Yeah.
Okay, so LT, if you want to take a screenshot of that chart, here's my answer to your question. And the question was, so London breakout, Mondays reduced risk, Tuesdays and Thursdays at normal. That's at this particular point. And here's how I worked it out. It looks like that chart's not up yet, Ash. Is that chart up on your screen?
You've got your Excel file up at the minute.
Right, okay. So the way I worked out why we need to reduce Monday's risk is because of this. And that's why I've got the days numbered down here, or the days labeled down here. Monday of the first week, loser. Monday of the second week, loser. Monday of the third week, loser. Fourth week, winner. Fifth week, loser. Sixth week, loser. Seventh week, loser. Eighth week, question mark. Okay, you've got the screenshot. Cool. So what I would suggest you do. Yeah, mate.
I was just going to say that what a great example of statistical analysis. You know, of how using statistical evidence helps make decisions. And just to kind of throw something out there, is it worth monitoring Monday without actually trading it until those statistical numbers actually turn positive?
It certainly is, but the reason I'm trading every single day, or I'm recording every single day, like I said, I didn't trade Friday, so you know my personal result is better than that, and my personal result will differ from this chart because I'm not necessarily trading on Fridays, or sometimes I'm not in front of the chart. So that will be my personal results will be different to this. But absolutely. But what I want to do is get a full 3 months, which is normally where I would go before I even start trading this thing. So I want to get a full 3 months of data, so that then maybe the next 6 Mondays are winners. I don't know. But until I know that, and I've got full evidence of a 3-month trial, then I think 0.5%, just knocking it in half, is enough for me at the moment. So that's the reason I haven't got 3 months of data. So, but yes, this is beautiful. a beautiful snapshot of what happens every single day. And if it continues to be a pattern, then yeah, sounds good, doesn't it? Way to go. And look, there are many other columns we can probably add to this as we go by. But at this point in time, that'll do. We'll stick with that. Right, let's get on to some trading, shall we? And
yeah, just yeah.
go back
Sorry,
to
mate.
the pound Kiwi. Yep.
Just is it the pound? No, the one with the arrows. That was the pound dollar, right?
Oh, okay. That chart, the pound. Yep.
Yeah.
New share. Cable
only
chart.
Because
This
the cable. I'm just wondering whether there's something else that may well have benefit to be logged. Now, I think we could actually look at that one. So we've got the very first bar on that chart. The 1, 2, 3, the fourth. Yes, that one. The fourth one on the chart, also of interest. The sixth one on the chart, also of interest.
Yeah.
Now, what obviously?
Are you talking about just chart patterns now, or candles, basically?
No, I'm literally talking about the entry, the level, the price.
Right.
What fascinates me about all that stuff is that the first one bounced away from the monthly pivot and came down. The next one bounces away pretty much from the weekly and daily. The sixth one bounces away from the daily. And I wonder whether it's, there's something else to be noted that and all of those. Okay, they might not have won. I don't know how exactly whether you calculate that one through the fourth one as a winner, but it did take off. And I wonder whether we kind of there's something else in there which is suggesting if the 8 o'clock bar is on a pivot, then it's another potential area for us to trade, and that could be sort of something that we could look at.
Yeah, you can weight it.
You can weight exactly. So rather than putting on 1%, then that goes at 1.1%. So you're sort of talking about cutting back on Monday right now because it's just not showing that there's any
6 to 1 loser. Yeah.
6 to 1 loser. I wonder what the winners are when it bounces away from a pivot, because that looks like a brilliant place, doesn't it?
It does. And again, that's why I would never take this trade.
Yeah.
If it wasn't fitting the criteria, well, if it wasn't a breakout trade, then I certainly wouldn't take it.
Yeah.
But we're going to probably learn a whole lot more than what we've already experienced with this so far. Well,
yes.
We will. And this is how you develop a strategy. Just keep monitoring it. And I'm choosing to test it forward rather than back. And I'm happy with that. That suits me.
Yeah, love it.
Okay, so let's get to these particular opportunities that I think may be coming our way this week. Aussie dollar's not one of them, but that said, this area is very, very interesting. And the reason it's very, very interesting is not so much on the 4-hourly chart, but if you have a look at the daily chart. Daily chart's very clear to this point where we've come off a base, we've put in a higher high, we've put in a higher low, higher high, higher low, higher high, higher low at this point. What happens if we match this high here but can't get through it will be interesting for me. Because here to me is the line in the sand through this level here. And if the Aussie can't get through here, I think it may well come back and put in a lower low. So I'm, still bullish because I still have this target above me. But gee whiz, look at all the confluences I'm now getting. I'm still headed for here, 70, 80. And I may well have missed the entry for that. May well have missed it, but I guess the contrarians part of me is saying, well, hang on a minute, 1, 2, we've got another phase to go here, but we've got to get through this level first and the monthly pivot as well. So whilst I'm disappointed that I'm not back in here, and of course Friday's no good to me, but I'm okay with it because I think if we do hit here, we're going to get another little retrace, and that might be my entry point. Or we may break this and retest it, better still, and then I've got an entry point. So if we can take out this high, up and back, I think I've got a far better chance of getting to there safely than I do if I were in the market right now, or if I decide to jump into the market long right now. So, on a daily basis, or an end of day basis, that's what I'll be looking for. Intraday basis, a little bit different, because we've got an untested daily pivot below us. I'd be willing to trade that back to there if I got the opportunity now. I'd really like to see the weekly pivot get taken out, though, before that were the case. So right now I don't have anything for, well, maybe I do, because here's how it may happen. I'll use this one, I think. So here's the thing right now. If we can get below here, take out the weekly pivot and retest that trend line that I've just drawn in concert with the weekly pivot, so a nice little confluence area. Yes, I most definitely think there's some pips available to here. It will be a very short ride, though. I'd be taking profit substantially here. I wouldn't be looking to trade through that level. In fact, I'd probably take it all off. So it would want to be a small candle to trade, to be fair. And on the 30-minute chart, I think that's probably the way to go. So we want to get back down here, retest that area. We want about, a 10, 12 pip candle, something like that. And if we were to get that, say, enter there, we've still got 15 pips, 10 pip candles, 1.5 to 1. I'd be probably willing to take that. There's not much, and it doesn't sound much, but I think that would be worth taking. But I think there are also far better trades, to be honest. And let's explore that, shall we? The euro. Look, I'm still a bear, the euro. I just can't get past that at this point, and I know that's not healthy. You've got to get past something if it's not there, but it's still there for mine. And I do love the fact that we've come back into this range, and I'm really looking for price to get back to this area here. So monthly pivot area. Let's look at that on a 4-hour chart. So if I were to see something in this area here, high test bar, anything like that would be really cool. I don't have a trend line available to me that I can use as confluence on the 4-hour chart, so I might have to dig down a little deeper into the 30-minute and 1-hour charts, but I'm more than happy to do that as well. But this is very clear to me, and this is going to be the theme for the next 1, 2, 3, 4, 5, 6, 7 currency pairs that I'm going to show you. So I won't spend as much time on them, I can assure you. But here's how I trade, basically. I'm a range trader, and when I see a range that's formed, what I'm looking for is price to come back into that range after a break, which is what we've had. So this is clearly now to me a fake out or a false break. And what I'd be looking for that to produce for me is back to the most recent resistance level or support level, which of course is the bottom of the range. Now, it's not that simple, of course. You do have to have some other criteria met, and those criteria would include not trading through support levels without profit, etc., etc., etc. So, all the basic don't trade into support or resistance areas still apply. Because I'm an intraday trader, I have to take note of those things. But that's it. That really is the very simple thing that I'm looking for. Back inside a range, lower high, look to go short. So euro dollar and any time frame that occurs on, I'm happy with. But the monthly pivot looks like the absolute P in terms of where I'd love to get short. Absolutely. Cable we've spoken about a bit, and actually I better make sure we're trailing that on a 15-minute chart. So let me just go back there for just a tick. All right, so a little bit out of the money. I don't like to look at that at all, I've got to say, but no. The system's the system.
Yeah, well, it's funny because the system, I mean, we'll see how it ends up, but the system may well actually be really good because, you've already kind of shown us that statistically Monday doesn't have as high a probability the other day. Yeah. So, that's certainly giving us a certain pattern, isn't it?
It is. But when I look at the daily chart, and I'm thinking, do I really want to trade through this level? The answer is absolutely not in a month of Sundays.
No, of
It's
course not.
just, it's a terrible place to go short. Absolutely
Yeah,
terrible place to go short.
yeah,
But as I just said, the system's the system, and get that out of my head. If I look at this, I've got to be thinking long, and I don't mean up to here. I mean just a rally.
yeah.
And if you're not prepared to trade that, happy days, no problem. It's sell the rallies at the moment. That has to be the strategy that I have to adopt.
Yes, yes.
And this is not a rally. So look, I hope it smashes through here and goes to Debilio. But at the end of the day, I've got to look for price to get back to here. Maybe the weekly pivot, and this would set up beautifully. Not so much on the 4 hour. Well, it'll do, but that trade line needs to be adjusted a little bit. It's actually a daily trade line. But say we were to break that, find the resistance in the weekly pivot, then sneak back underneath it, retest it, then that's my short. That's my short there. Um, or you could just trade straight off the weekly pivot if you've got the kahunas to do that. That would be the trade, not this one. This is not the entry short, I can assure you. But that's kind of where I'm at with the pound. Sell the
Yeah.
rallies. EuroCAD is exactly the same upside down. As you can see, we've got a very, very well-defined box range here. We've got refusals at that level in multiples. And what I'd be looking for here, pardon me, is maybe price to break out of the range, this range here I'm talking about. This is a daily chart, and then come back and break it. Alternately, on the smaller time frames, just give me a higher low. So come back to here, give me a higher low in this area, and I can trade it long. Again, intraday trading for me means that I have to take profit at resistance levels, and I'd be taking profit there. If I entered here, I'd be taking profit here, be taking profit here, and letting the rest rip. So that's very much the case on EuroCAD. Again, any time frame would do. Love to see it bounce off the top here now, come back, put in a higher low on the daily pivot. Yum. That would be very, very nice. Aussie CAD is pretty much back in the same boat. The interesting part about Aussie CAD is what I've just said to you on the Aussie, and great news on the Aussie actually on, was it Thursday or Friday? I can't remember which one. But also very, very good news on the CAD with the employment figures. Employment rate went down by 0.2%, and nice figures produced for the month. So makes this one a little bit tricky in terms of what's going on fundamentally. But exactly the same thing applies to what I've just said on EuroCAD. I need this to come back, test the daily pivot maybe, give me the higher low that I'm looking for, and then swoop and trade it long to, well, you've got to take profit at the monthly pivot. There's no question there. And there's probably not that much left in it, but I would leave a little bit just in case it does break out. Ash, I've got another trading system that I'm working on at the moment that I'll just give you a brief
Oh,
preview into.
great.
You know, I love the Three Little Indians, right?
Hmm.
There's a contextual thing, and it's to do with the bigger picture. And the bigger picture here is most definitely we're in a downtrend, right? So
Mm-hmm.
this one probably doesn't fit it, but we're also potentially reversing, and this looks like a double bottom and a big higher low sitting here. So I'm pretty cool with that. But when I see the top of a range or even the bottom of the range in reverse, of course, false break, higher high, false break, higher high. That's my Three Little Indians. Always looking for this to break to the low side. Always the range I'm talking about.
Yeah.
So what we saw up here is probably what we're going to see down here. But ultimately, what I'm looking for is this to smash through this high. So couldn't do it. False break to the other side, and then away we go. But it's really best when, from what I've experienced so far, it's really best when the trend is long. So this would still be counter trend at that point, I would have thought. Yeah,
Yes, I see what you mean.
kind of. You
Yeah,
know what I mean? So
yeah,
the primary trend is definitely short. So it would still be counter trend to trade it, but that's what I expect to happen here. I expect this to smash through here, challenge the top of the range. The range for me is the channel, right? So I'll be looking, if I do find a way into the long, not to take everything off here, because there's still, what, maybe another 100, 120 pips available to us at that point.
yeah, yeah.
So I'm developing that one in my head at the moment. I haven't really gone too far with it, but I do like it. It really does shine a little bit. You can probably say that we're trending intermediate up, maybe. You could stretch. You could stretch the
What is that? It's a daily, isn't it? Well, I guess you need the weekly. Let's have a look at the weekly on that. That's the Aussie CAD.
Well, we do have a higher high than that, but we haven't really had a high.
Yeah, I think it's
It's
a bit rangy on the
it is.
intermediate, but yeah, I'd say yeah because really with the daily, it's down, isn't it? We've had a lower low.
Yeah. I mean,
So
you can't, in your wildest dreams, you can't say we're in an uptrend, really, at the end of
yeah,
the day.
yeah.
But yeah, look, take a look at that, and hopefully I'll remember to follow that one. Oil, I'm still waiting for that lower high and haven't got it. Probably could have taken a specky on this, because I was so convinced that this was going to repeat itself, and ultimately it has done that to a degree. And I suppose if you count the top, it has come off 700 pips, like it did here, but it went further than that down to the bottom. Certainly not going to trade it short from here, but a pullback to the weekly pivot would be very, very interesting on oil for me. So it's exactly the same trade. I'm talking the same trade on every single one of these guys. Every single one is the same. Back inside the range, lower high, short. Back inside the range, higher low, long. There's no miss. I just muted myself. There's
Yeah,
no
I wonder
mystery
what
as to
that happened.
what I'm trying to achieve here. It's very, very basic. This one, messy as all get out. And I said this yesterday. This is a very, very similar box range, but we are bang in the middle of it. We haven't come off the top. We haven't come off the bottom. This is messy, messy, messy. You could even probably find a box range inside the box range if you wanted, and look to trade it that way. Me, I prefer to see it go to the top here or the bottom. It will break out, there's no question. Just a matter of when and how far. And I would be tipping that the next port of call would be short, would be here, and the next port of call long would be here. And it's then that I'll start to pay attention. It doesn't have to break out, right? It can hit the top, then come back and give me a lower high, or hit the bottom, give me a higher low. Either one is fine. Euro yen, gee whiz, I've been trying to track this for ages, and it's. I was using the channel as my preferred entry points, but it's also formed a box range at the same time. But you'll note with this one that it has put in a beautiful tweezer bottom, if you like, sitting here on the bottom of that range, but no lower high, no higher low, nothing to trade yet. So that's just in the land of nowhere as well. And have I reached the end? I think I have not. One to go. Pound yen. So there's about 10 of these doing exactly the same thing, right? It's just a matter of time before we can find a trade off the top or the bottom. This one's come off the top. Not perfectly, but it has come off the top. So I'd be looking for a little bit of a rally, maybe back to the daily pivot if it were to do that today. Not likely on a 4-hour chart, but maybe on an hourly, maybe on a 30-minute. If it were to come back to here, give me that lower high that I'm looking for, then I'm going to look to trade it towards the bottom. So, mate, many, many things to look at for me this week, all the same. And
Yeah.
this is kind of my little playground, really. That's where I like to play. And I'm very much looking forward to one or two or three of these setting up so we can get into them.
Great stuff, mate. Okay, well, The pound moving to the downside in a buy zone and the FTSE moving to the upside, being in a sell zone, gets me interested, but without any actionable things to do really. So I'm going to wait on this data and see what happens. The only thing that we can really be contrarian about, just for everybody out there, if I was going to buy the pound and effectively be selling the FTSE, I need to see those GDP numbers and manufacturing numbers be a little bit stand out to the upside. Actually show some positivity, which could put the Bank of England on hold. So, without those numbers, I think this pound is going to continue to the downside at worst and stabilise here at best. So I'm going to continue to look for some weakness in the pound and potentially some strength in the FTSE. But I am just waiting to go short for FTSE, so I'm not going to trade it long. I'm just going to wait for the potential short because that's what I really want. But right now I don't have a reason. The other markets have not changed. We still have weakness in gold. We still have solid S&P as grinding its way forward. The dollar yen is at 109.66, and that is another area to the high side which is holding. Gold is at 1551, which is at the low side and holding. So there's not really a driver. I didn't do. You've covered WTI.
Very briefly. I didn't really go into it too much. Dollar yen might be well in the category that I'm looking for as well. It is at the top of the range.
Yeah.
And well, I didn't want to do that. I wanted to do that. And if that were to sneak its way back in here, gee, I start to get interested then. Not easy to trade right now, but the latest on a 4-hour chart's giving us a big bearish engulfing bar. But it's not going to give us a lower high at this point. So a little bit tricky to actually trade this right now. I could probably extend that range right up to the top of these now. I would think, but I'm certainly looking at this one as well because I think it is I'm not going to say a free ride, but if you have a look at this again, we've got false break. I'd like to see a higher false break here. That would be interesting. Very, very interesting.
And they're looking for short.
Yeah, then looking for short.
Yeah. I love this one. This is my chart of the week. The dollar yen.
How are you going to get in, mate?
Well, it's going to have to show some a lower high on a shorter term time frame. With that daily chart the way it's looking right now, I like Friday's bar. I'm questioning whether the trade opportunity will come today. I wanted to be all over this today, but it's just not there. So I'm questioning whether there will be an opportunity today, or whether actually what we see here is that. Today gives us some more, price action which just holds its ground. Could grind forward. I think I quite like your theory that we could see another false break to the upside. Because there's no reason for this to explode today, but there's every reason that it could continue to grind. So it could grind up a little bit more. But if it ends the day around about this same level, could get interesting then tomorrow.
Absolutely, I would think I'll try and find the right chart to demonstrate this. But you would imagine there's a fair bit of liquidity sitting up here.
Absolutely right. Yeah, there certainly is. But this is the thing, isn't it? With that bar that we see where it was incredibly bearish was off the back of the situation in Iran, and certainly for now that's subsided. So we saw that particular position completely rejected and reversed. So this market is still running pretty confidently, and I'm just not willing to fight it off technical numbers alone. There's got to be a reason for this to come down.
Yeah, absolutely.
So we just got to wait. Yeah, got to wait it out.
Too much going on to be super confident of your technicals right now, I think.
I agree. And as I say, I think when it comes down to it, we're really looking at Wednesday as a key day to go into. I'm not saying that it couldn't happen before, because the big thing on Wednesday is the signing of that trade deal. So who knows? We know Trump, and we know that he is incredibly random and causes a lot of chaos. So could be him. It could be him.
And that's
I
the
don't know
risk.
what
The
it's
risk
going to be.
is the risk is to the downside because of that. You know,
Exactly.
If he
Exactly.
bails out or just does something tricky like he can,
Yeah.
we're going to see a big move now.
I think so. And with that in mind, we can't be the only people on the planet thinking that. I wonder whether those big kind of commercial players may have that in the back of their minds too. So would they really want to be committing any more to the upside until that deal is signed and sealed, rather than kind of getting involved just yet?
Wow, this is compelling for a false break, mate.
Mm.
That's what I'm looking for. That's what I'll be looking for. All right, I'm done.
Lots
of
man.
things to look
Me
at
too.
for me. As I said, it could be a busy week for me if they, even if 3 or 4 of them set up, be cool.
Yeah, sounds good, buddy. All right, well, I'll see you in the morning. Same trade time, same trade channel.
Yes,
5 to 8.
5 to 8. That's a date. Don't you be late, guys. Have a good one. Bye.
Have a good one, guys. Have a good one, Jeff. See you tomorrow, buddy.
You too, mate. Bye.